You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Bootcamp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Bootcamp.
All right, everybody. That music means we are back. It is Education Wednesday. Not just Education Wednesday anymore on the network. It's also Futures Wednesday. We got to all that fun in a little bit. My name, of course, Mark Longo from theoptionsinsider.com. Hope you're having a great trading week. Hope they're all bangers for you out there. But at the very least, you're not losing cash out there in these wild and whipsaw-y markets. Of course, if you want to join us for some awesome pro Q&As, yet another banger just on the network yesterday. You want to check all that fun stuff out. You want to, of course, get options oddities. Talk about bangers, man. That one's been wild of late. We got a fun one in store for this week as well. We're just finalizing the arrangement. Should be a kind of a unique oddities. You folks listening on the pro gonna get access to some cool stuff. It sounds like so. Look forward to that. If you want to join us for Options Oddities, which is also the official after party of Volatility Views, only one place to get it. theoptionsinsider.com/pro is the place to go to learn more. And trust me, you want to learn more. As we go around the horn, learn who's joining us on the old show this week. Pleased to welcome back none other than the black-hatted one himself, a.k.a. the Prince of Frankfurt, a.k.a. the guy who's never paid full price for a hot dog in his life. He is Dan Passarelli from Market Taker Mentor. Mr. P, welcome back to the show. Put down that hot dog, sir. It's showtime.
All right, showtime. Yeah, ready, Mark. What are we going to talk about today? We got good stuff to talk about?
Let's find out. Listener takeover this week, listeners. Time for a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, welcome to the mail call. And, I love when we do the deep dive topics on OBC. That's kind of what the show was started about. The downside of doing that, Dan, is even when we do a couple in a row, the mailbag just fills up. Folks just take the opportunity. I'm going to ask a question about this. So we need to do regular mailbag maintenance, regular mailbag pruning on the show, Mr. Dan. So are you down for a little bit of that, sir?
I'm down. I'm ready. Let's do it.
All right, let's get into that. First, let's pay off a little bit while the chat is waking up and everyone else is getting ready, listening to the show. Let's pay off some of the hot, contentious questions of the week we've had going on here. We've been talking about with you folks. Also, a lot of fun flash polls for some interesting trades that have been coming across our radar of late, including last week. We asked you, hey, we saw a block of 10,000 of the April 30s going up for 47 cents. This might have actually been on the Monday option block show. We said, quite simply, it's a pretty big chunk of change. Are you a buyer or a seller at that price or not interested? And Dan, 46.7% of our audience, so not quite half, but pretty close to it, saying they want to buy those VIX April 30s for 47 cents. Exactly a third, 33.3%, said they want to sell them. 20% saying, yeah, I don't know, the 30 calls not really doing it for them. Mr. Dan, are you a size buyer of the April 30s for 47 cents in VIX?
Oh, boy. Well, I would not be a size buyer, but I mean, I might buy a few, not necessarily with the, the textbook P&L diagram sort of way where I think it'll be above $30.47 at expiration. But I think there's a pretty good chance between now and then you could probably sell those calls for more than 47 cents and take a little profit early.
Well, we were also talking about, got Frankfurts on the brain, Mr. Dan. Hot dogs driving me crazy out here. I haven't had lunch yet. All right. What we've been talking about also on the show, listeners. This was a weird one, Dan. This was just a few days ago on the network. We saw going into Micron's earnings, people were feeling super enthusiastic about the near-term upside for Micron. A week ago, the stock was trading right around 105 or so. And folks were just loading up on a bunch of March upside and all kinds of strikes. And also a pretty sizable April vertical traded, Dan. 60,000 times. It was the April 125, 135 heading into Micron's earnings for 81 cents. We said, wow, that seems like a hell of a move people are looking for in Micron going into the earnings last week. Did you folks want to buy it or sell it at that price? And nearly half again, Dan, 47.8% said they want to buy that bad boy. 26.1% said they want to sell them, and about the same level said they weren't excited, I should say, by that spread. And Dan, our audience wanted to buy this one. This is a rare moment when our audience, shall we say, poops the bed, because this one's looking rough. Micron fell out of bed post-earnings. They're off about $10 or about 10%, trading $91.50 right now, just in the last 5 days. So obviously earnings, no bueno. They did get up to about 108 going into their earnings last week, Dan, and then right out of bed. So Dan, what are your thoughts? Our audience, a rare swing and a miss. Now they have till April. They have time, but April 125s ain't looking good, sir.
Gosh, no, not really. I don't know. I mean, the folks who listen to our show habitually know all about my earnings play. And it's not directional. Like, I don't know. I am a big time skeptic about taking directional plays going into earnings. I just don't think people can predict what something's going to do on earnings. I mean, you know the routine. Even if it outperforms, it might not outperform enough and still, go down a bunch. So, yeah, that trade is not for me. For sure. Not because I don't care about Micron. I mean, I don't know. I haven't looked at Micron in forever, but I don't know. I'm just not a directional earnings guy. Nope.
Well, here's something that I think speaks to your sensibilities, Mr. Dan. I know you like yourself a little bit of wine, a little bit of the old vino. Sometimes during the show. I have to keep telling you, stop the day drinking during the show, Mr. Dan. But we had a fun discussion with our good buddy, Mr. Tony Saliba, on the Crypto Rundown on Monday. And he's talking, Dan, about tokenizing a lot of different assets, including wine. He wants to turn wine into a liquid asset. Pun intended. You get it? See what I did there, Mr. Dan? So we thought we'd put it out to our audience. We said, there are wine futures available. I know you could trade. You can go out and buy cases as well and kind of store them in your cellar and keep the right conditions, temperature, humidity, all that stuff. But it's kind of a bear to do. It's laborious. If you want to turn around and sell it and you have physical wine, you have to have it recertified. It gets a whole process. So we said, what about, would you trade wine if it was available in a liquid, tradable form as a tokenized asset? Yes or no? Mr. Dan, I know you like yourself a little bit of vino. You used to have the old corks and wines. What are your thoughts about trading wine, sir? And he talked about having an order book and having options on wine eventually, sir.
Well, a couple of things. First, I give up all alcohol every year for Lent, which we're in the Lenten season for all those of you who observe that sort of thing. So I'm dry as a, I don't know what the analogy is, but I'm all dry for a while here. But I don't know if you could. I don't think you could really do options and futures in a very liquid way on wine because it's just not super fungible. I mean, you could do it if it was like, you could do it by label, but a barefoot or a bottle of Turley is going to be a little bit different. So I don't know. I just don't think that the underlyings are so fungible, except for, you go to Italy and there are some of the big winemakers who just crank out like a gazillion barrels and maybe wine futures on if that's the underlying. But I think you'd still have to go from winery to winery. I don't know. And I don't even think you could do it with grapes either, because it's kind of the same thing when it comes to grapes, you got the microclimates. People pick out little tiny few yards by a few yards plots in a vineyard because they have better soil and sunlight and whatever. So I don't know. Maybe I'm missing wine because it's Lent and really pouring my heart into this one. But
Dan, no day drinking Dan. You're seeing the raw, true Dan right now on the show, listeners. Lenten Dan is the real deal. Well, Dan, our audience agrees with you. Nearly 2/3, 64.3% saying no, and 35.7% saying yes. So they're not down for some wine options. I'm surprised, including one of our pro members, Mr. Age Del Aquarius. Got to see you back in the live, Mr. Age. I get it. You're busy out there. Usually when it's cold is when he can come in on the live, because then he gets snow days at home. He says, nope, I prefer the old-fashioned way. I hand you dollars, and you hand me a bottle of wine, and then I drink it. So he wants to take instant delivery, Dan. He doesn't want to wait for all these tokens and store things in a warehouse. He wants the old-fashioned way, instant delivery of wine into your tummy, sir.
Well, I do like the way he's thinking. I'll tell you that.
Speaking of the way Dan is thinking, listeners, let's get to some of that now. Might be a little scary, so buckle on the old seatbelts. It is time for the MTM question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
All right, Mr. Dan, the floor is yours, sir. What you got for the folks this week?
All right, the question is, Dan, what's the deal with that podcast you mentioned last week? So let me just clarify this. So, this show that I've been doing with Mark for, how long have we been doing this? More than 10 years, right?
Over a decade. I think it was around 2012, 2013 when we started it.
Jeez Louise. So, so this is the main podcast thing here, but I'm doing a temporary side project, which I expect to last maybe about a year, where because I'm writing a book on covered calls and cash secured puts, I'm doing a podcast on writing the book. And so I'm sharing some of the things that I'm writing and having a couple of thought leaders on there to help me talk about it. But it's all exclusively only about covered calls and cash geared puts in the wheel and all the thoughts that are going into my book on management and mindset that goes into it to actually make it work, because it's hard for a lot of people to make covered calls work. And most of that is just mindset stuff and secondarily management stuff. So that's what the book's about. That's what the podcast's about. That's what the Substack is about. It's this little ecosystem. So the podcast itself is called Wealth Building with Options. Wealth Building with Options. And you can find it anywhere, whatever you're listening to this show on, you can find it there. And it makes a nice complement to what Mark and I talk about every week. It's a completely different concept. But if you like to invest with options, covered calls, cash geared puts, that kind of thing, give it a listen. Please leave a review. And I'd be interested in your feedback. Like to hear what you think.
So, Dan, this is your side project. The analogy would be, Options Bootcamp, me and you, we're the Beatles. And then this is your Paul McCartney's Wings, a little side project, right?
Exactly.
Not a dated reference at all there for all of our sub-millennial Gen Z listeners.
I have a funny story about that, actually. For people who are there any Wings fans? Raise your hand. Oh, I forgot. We can't see your hands raised. But
literally, the only reason I know them is because of the Simpsons episode about the guy getting his wings. I love that.
Well. So I'm not going to lie. Everyone here listening who's a habitual listener already knows this. I'm a big nerd, and there's this one year where I went to Beatlefest, which is for Beatles nerds. And I was there because I fell into that category. I still fall into that category. But I go there, and so, we're doing all this Beatles stuff, buying a bunch of crap and listening to music. And Kathleen and I go into the bar at the hotel. It's the Hyatt Regency up by the airport here, up by O'Hare in Chicago. And we're like, let's get some lunch, get a beer. And so we sit down and, there's like no empty tables, but there's this one guy sitting at a table and, we got our beers. We go up to him and get, hey, do you mind if we sit down here? There's nowhere else to sit. He's like, oh yeah, sure. And we're talking with the guy and he's got like a British accent. And, I'm like, oh, you're from the UK or something? And he's like, yeah. And he's like, oh yeah, I'm Denny Lang. And I'm like, oh, okay, yeah, nice to meet you. And then it comes out through the funny look on his face when I just said, oh yeah, okay, I'm Dan, nice to meet you. That he was one of the members of Wings for many, many years, as well as other bands. And so we sat down shooting the breeze with him, not really even knowing anything about him. So.
And you burst his celebrity bubble. You had no idea who he was. He promptly went home and ate a bullet after that. He's like, if they don't know me at Beatles Fest, then I'm done. My career is over. That's why we call him the black-headed one, listeners. He goes around just bursting bubbles left and right out. No celebrity, no mid-tier or lower celebrity is safe when Dan is around. All right, Dan, we got a question come in for the live for you. Think you can handle it? You ready?
Yeah, let's do it.
All right, let's go out to the live first. We got other ones you folks have sent in. We'll try to get to as many of those as we can as well, listeners. But the live listeners, the folks hanging out in the pro, they make the time to listen live. So you folks always get bumped to the top of the list, just like, where was I? just lost it. Oh, here it is, Option God. He wants to know, I know Dan was bullish on the market earlier this year. Is he still bullish or taking a more cautious approach? Maybe just long some SPX calls or long the underlying with some puts in his back pocket for a rainy day. So let's start with the first part first, Dan. I think you were a little more optimistic earlier in the year. Are you still optimistic? Are you buying this recent rally we saw on Monday? Today, obviously, a little bit of reversal of that. Or are you a little bit more cautious? And then B, if no matter what your outlook is, how are you setting up in your broad portfolio, sir?
Yeah, I am. The beginning of the year, I was bullish. Just mainly because statistically, the market goes up about 10% a year. And we came off a couple of years that outperformed that. So, I mean, I wasn't crazy bullish at the beginning of the year, but, I was bullish. And I was sitting I was actually sitting in a fair amount of cash. I mean, I was still long the market, but I was still sitting in a fair amount of cash. And with this pullback, I've been selling a lot of puts and getting assigned on some of them and skating on some of them. And the plan was to get assigned and skate. It's actually going okay. Right now, if we're looking at December 31st as the date, I'm definitely more bullish now. Markets pull back, and that's when people panic, but that's the worst time to panic. That's the time to take advantage of a little bit higher volatility for your long-term investments, to set up and scoop up some deals for the long term. So yeah, definitely a little more bullish now, because markets have problems, crazy stuff happens. I am a firm believer that all the stuff we've got going on now is gonna end up working out one way or another eventually. So yeah, I'm selling puts.
Selling puts is Mr. P. By the way, we got some of your side project fans here, including in our live Mr. Dan. Mr. Unlimited said, I listened to a few episodes of Dan's new podcast. It's a good show, he's saying. So there you go, Dan. You've lured some of our pro members to the dark side. Damn you forever for doing that. All right, let's keep rolling. Let's go out to, I like this handle, Weak Sauce, or maybe he uses two S's. So Weak Sauce. I kind of like it that way as well. Weak Sauce wants to know, I have a hard time figuring out when I should do a time spread. I've been trading options for about 1.5 years and have been a faithful OBC listener for the last 6 months. So welcome to the party, Weak Sauce. He says, I've listened to a few of your episodes on time spreads, and I still have a hard time pulling the trigger. I think I just don't think in those terms. When I look at a stock, I think, is it going to go up? Then maybe I'll buy a vertical spread. If I think it's going to go down, then maybe I'll buy a put spread. But I typically think in vertical terms within the same expiration month. That's just how my brain tends to work, I guess. I don't think, can I trade 1 month against another? Am I weird? How do I get my brain to take that leap? First off, you're doing the right thing. You're listening to this show. You're putting in the work there, Weak Sauce or Weak Sauce. But no, you're not weird. First off, you're not weird. I think that's why I always call time spreads an options 201 or maybe an options 301, because you're right. It does require a little bit of a mental lift. It is a next step, a next effort to think, I can look beyond. Everyone's just trained. You look at that one chain. Okay, I'm done. I'm going to buy this one. I'm going to sell this one. I set up my spread, set it and forget it. Here we go. Let's dance. People don't come into options thinking about spreading 1 month against another, unless you're a diehard future spreader, maybe. That's pretty much the only other scenario where you're really going to encounter this. You're not really taking Apple stock and buying 1 month Apple stock against 3 month. It doesn't exist, right? So it takes the next leap. So I could see why you're having a hard time. You mentioned you've heard some episodes. Luckily for you, we've done a ton on time spread. So if you, Mr. Weak Sauce, or anybody else listening wants to go crazy on time spreads, we've got quite a few. I pulled up just some of the recent ones for you. Episode 303 from August 28th of last year, straddles, earnings, time spreads, and crazy VIX stupids. That was a fun one. We had a size super mega VIX stupid going up recently in VIX. Listen to some recent Vol Views episodes if you missed that one, listeners. Episode 283 from April of last year, we have calendars versus diagonals. That we talked about time spreads and obviously diagonals as well on that one. Episode 254 from September of 2023, volume mysteries and volatility time spreads. On December 7th of 2022, episode 215, what the F are directional time spreads? And then episode 198 from August 10th of 2022, time spreads and second order Greeks. May of 2022, episode 186, time for a time spread refresher. If you're just starting off in time spreads, I recommend you start there, episode 186. And then all the way back to June 3rd of 2020, episode 89 with a mail call episode all about questions about time spreads. So you could just mainline those. What is that? 1, 2, 3, 4, 5, 6, 7 episodes there, Mr. Weak Sauce. And that'll get you, I think, at the very least, in more of a time spread friendly mindset. But that said, Dan, I've heard complaints or concerns like this in the past. People just don't think that way. They don't think, oh, third month against front month or week 3 against week 1. It's just not natural. So when you're out there coaching and mentoring people to become options traders, how do you get them to think in what is, I guess, a new dimension? You know, the Z axis. They're used to doing X and Y only, and now we're throwing Z at them, Dan. How do you get them to tackle that?
Yeah, I mean, a couple of things. One is, first of all, great attitude. It's the way you should be thinking is if it doesn't really resonate with me, I don't want to trade it. Good. Don't trade it until it does resonate with you. And, you know, let's just say it's a different chart with an X and a Y axis. Like if you're comfortable thinking, hey, I think the stock is going to go up. Okay, great. Now let's think about, hey, you know, if this happens, I think this option price is going to go down relative to this option's price. That's really what we're thinking. It's like instead of thinking about the option as a substitute for the stock, which is where everybody starts thinking about it that way, I think. Start thinking about it as, hey, I'm trading options. I'm not trading something even very much related to the underlying stock. I'm trading this volatility level, really. I'm trading this theta relationship. The only part of the stock that I really care about is, will there be too much volatility in it where it can move too much? So yeah, it's just it's a different reframing that needs to take place. But, you know, A, you'll get there, or B, if you don't want to get there, don't get there. There's definitely other ways to trade options besides time spreads, but time spreads are good, man. I think they're one of the best sources for edge when it comes to trading because they are so misunderstood. And so there's a lot of room for using some smart things that most people don't look at.
Yeah, there's a lot of ways to approach this. And again, I mentioned all those episodes. Start there. That's a great starting point. If it's still intimidating to you, Dan's right. You don't have to trade them, weak sauce. But if you are intrigued, it sounds like you are, you can look at them in other ways too. For example, we just did a time spread on our the options oddities. We were piggybacking on some longer term paper, a little over a month, about 5 weeks in Vodafone, I believe was VOD. And there's a lot of paper going up, buying a lot of April. And it seemed like that's where a lot of the paper was coalescing against. So we piggybacked on that trade because we've had some fun trading Vodafone on that show in the past. But I also looked at it and I said, I don't know if in the near term this thing's really going to take off. In the meantime, I could sell the front week against the roughly 5-week option that I just bought and get about 40% of what I paid for that longer term option back if the stock just sits around for 1 week. So that's what I ended up doing, just to really defray my outlay, because I just didn't think that move was going to happen in the coming week. It turned out to be a decent trade because Vodafone kind of fell out of bed this week. So that did help shield against the pain out there. Let's see where it is. It's kind of treading water out there today. But that is a simple starting point to start thinking about. If you want to go the long premium way, I recommend straight at the money. Don't start getting into diagonals yet. Just go straight at the money. Let's go out, keep it a simple period, maybe 1 month. I went out 1 month against, or about 5 weeks against the front week, but you can set it up however you like. And straight calls usually seems to be easier for people to understand. You can do the put route obviously too, but that some people that just throws their minds into a tizzy, a disarray. They can't handle it. So maybe keep it straight calls. And then if you want to just defray some of your costs, you don't think the movement's going to happen in that time frame. That is certainly a use case for time spreads, a very basic introductory use case. You don't have to worry about one term structure versus the other. Is this vol overpriced? Is this underpriced? Forget about all that. That's intimidating you. Just use that as your entry point to saying, hey, I don't mind. I think the stock's going to move by this period, but maybe not in this initial period. So you buy one and then you sell the other. That's all you do. Again, I get it. It's a little bit of a lift, but you'll get there. Let us know. Keep us updated, Mr. Weak Sauce, just because I like saying weak sauce. It's fun. All right, Dan, let's keep rolling. We got a lot of people writing in It's fun. It's fun to have the people write in on the show, Dan. Plus, this guy gets points for Weak Sauce is a fun handle, but X-Men 97, that's a legit handle. If you know, listeners. Remember it. That's all I'm saying. If you know what I'm saying, then you know what I'm saying. But he says, hello from Vancouver, BC. Dan, the international reach of OBC continues to grow. Now we got dirty Canadians writing into the show, Dan. Can you believe it? I just angered all of our listeners to the Great White North. I'm just kidding. We love all you folks, even you folks over there in Vancouver, BC. By the way, a lovely city, a beautiful. I need to get back up there. He says, greatly enjoying the vast archive of knowledge that you guys have graciously bestowed on us. All right, Danny, I take it all back what I just said. Canucks are my favorite people. They are so gracious and kind. I love you all. So I take it all back. Blame Dan's day drinking for what I said earlier, Canadians. All right. He says, still really just scratching the surface, but I'm plugging away. Please be patient with me if this is something you've covered on previous episodes, as I haven't heard them all. But where do you stand on ratio vertical spreads? I've been playing around with them in my trading accounts lately in both the I'm looking like he means short one, long two, and the long one, short two variety. Uh-oh on the latter, but we'll get there. Are these strategies that you utilize in your own trading? Any insight that you can bestow would be greatly appreciated. Wow, you asked so nicely, X-Men 97, and your handle is legit, so you get points for that as well. We have touched on ratio spreads more than a few times. If you want to go back to if you want to extend it to include a stock repair strategy, which is very much a ratio spread as well, it's going to be long one, short two against stock. If you include stock repair, we've been talking about ratios for a while. It goes all the way back to October 3rd of 2013. Think about that, listeners. I defy you to find another options podcast, let alone another options educational podcast that goes back to 2013. Outside of my network, obviously. We start back in 2007. But go find another one that's been talking about stock repair since 2013. I dare you. But yes, episode 31 talked about stock repair. Episode 36 from that year, December of that year, also the year-end spectacular, we talked about ratios. All the way jumping ahead to June of 2022, we said it's time to talk about stock repair in episode 190. Episode 227, ratio put spreads and offensive hand gestures. That had to be Dan's work there. That was from March of 2023. And also from March of 2023, episode 230, exploding bank puts and more fun with ratio put spreads. So Dan, it's been, I guess the moral of my story, well, first off, we'll get to his question. But then secondly, I'm looking at our archive. It seems like we've been a little bit. It's been over 2 years, well, almost exactly 2 years since the last one. Since we've really had an episode devoted to ratio spreads, Dan. So my first question is, do we need to go back to the well? Is it time to revisit ratio spreads? And then B, what do you have to say here for X-Men 97? He wants to know, he's been playing around with short one, long two, and long one, short two vertical strategies. Are you a fan of those, and do you utilize them in your own trading?
Well, I mean, they all have their own place. The main thing that I use long one, short two is when it's part of the stock repair strategy, which is honestly one that I don't use a lot. You just use it when it's time to use it. But outside of that, I don't use a whole bunch of verticals. Couple few times a year, maybe. But that doesn't mean I'm saying not to. If you can make a trading system out of it for sure. It's just not something that I have chosen to try and make a trading system out of.
So Dan says not to. Don't do it. That's what he said. No, they're not bad. I mean, obviously, if you're going to buy one, sell two, we talked about that many times on the show. That's now your net short units. So outside of doing that in a stock repair strategy where you are not net short units, I would not recommend doing that. The short one, long two, I have played around with that, usually in products that are prone to explode in one direction, particularly to the upside. That's why we see those a lot in products like VIX, because VIX is designed to explode to the upside. So that is the most prominent use case that you're going to see for that, the short one, long two in VIX calls, because obviously once you blow through that lower strike, the upside is going to kick in and it's going to pay dividends. So you have to find an underlying that is poised to explode. You can do it with puts as well. It's not as common with puts for obvious reasons. Obviously, a finite amount of movement you can get to the downside versus unlimited to the upside. But if you're going to do that, you need to have an underlying that's going to explode. So you need maybe one of these quantum crazy names that have been exploding of late, or like I said, a vol product like VIX. That's where you usually see a lot of that. And it can be a good way to, if you're selling one, buying two, or maybe whatever ratio you do, it's a good way to kind of defray your outlay, because obviously if you just straight buying VIX all the time, that gets expensive when you don't get the pop. So at least in that sense, you're kind of managing your outlay until you're there for the big day. You want to be there for the blackjack moment at the table, right, listeners? And that's one way people have found to do just that. All right, let's keep rolling on the international theme, Mr. Dan. Let's go out to our old buddy Diver SK is giving us another update. He's been writing in with his wheels. He was talking about how he got run over on TQQQ recently. So he wrote back, he said, he was on his way to Leipzig, Dan. So our international audience continues. I didn't realize Diver SK was an international as well. So he was heading over to Leipzig, Dan, this morning, listening to you guys mentioning me on the pod. Enjoyed that. And he had some updates on what he actually did, because he says, hey, refresh us. What are you doing out there again? He says, the trades I do involve credit spreads and rolling when challenged. Hence the question I had on rolling. I am very good at it, he says, i.e. a year of rolling TQQQ at positive yields and other tricks such as adding in flies and broadening the spread. So in the long run, I manage based on annual roll yield, and as long as I can stay above 50%, I roll. Maybe a week or up to a month. In 20 years, he's been doing it for 20 years now. In 20 years with my techniques, virtually no losses except trades on VIX used as a hedge. Okay, well, that's what VIX as a hedge is designed to do, right? He says, note, I use a self-developed proprietary technical indicator strategy for picking strikes and expiration dates, mostly weeklies, on the TQQQ trade running on 3 contracts, max 10 wide on the short calls and put spreads, over 8,000 in premium on max risk of 9,900. So that's pretty good. I got run over on TQQQ by shorting calls too soon, but I managing it over time. It became a great trade. Currently, Meta is giving me trouble. Yeah, Meta is on a bit of a runaway bit of upside. But there you go, Dan. A little bit of an upside. He has evolved. I know he started out listening to us and implementing the wheel strategy that Matt Amberson was talking about, the 70 delta wheel strategy. Sounds like he's adapted it in many ways, including flies and other things out there. Dan, what are your thoughts on Diver XK? Sounds like he's been crushing the game for 20 years, Dan, harvesting the old risk premium.
First, that's awesome. That is really, really great. I just love hearing success stories like that, where somebody put in the work, they figured it out, dialed it in. He's got a proprietary indicator that he came up with. I'm assuming him, right? Could be her.
He says it's his proprietary indicators. I'm going to give him the credit.
Yeah. So, oh man, that is really great. I love that. I love it. And yeah, if you got run over by this one thing, that is going to happen sometimes with these. It's interesting that he says almost no losses. I wonder how that factors into the management plan. I wonder if some of the success is just from being very, very cautious and taking very small wins and just doing that over and over, or I don't know. I'm always interested to hear what other traders who figured it out are doing, and that's really cool, man. That's really cool.
Really cool indeed. Listeners, by the way, if you're not familiar, TQQQ is the ProShares Daily 3X NASDAQ. So Diver 1X NASDAQ ain't going to do it for him, Dan. Not even 2X. He's going down the rabbit hole of 3X. So he's definitely leveraging up his wheel trading list. Unfortunately, that music means no more levering up for this program. But if you're hanging out in the pro, you're in luck. Stay tuned. I'll be back in a few minutes to talk all the madness popping off in the world of futures. And spoiler alert, there's a lot. What's going to make it on the show this week? Is it going to be crypto? Is it going to be metals? Is it going to be equities? Is it going to be ags? Is it going to be Dan's favorite dairy, livestock? You never know. You got to tune in to the Futures Rundown coming up right after this show. If you're listening live, if you're listening after the fact, just hit next on your device of choice, and that will get you to the Futures Rundown. Yet another reason why OBC listeners should be subscribed to the full network. A lot of great content, even if you're not a futures guy or gal. I get it. You know, I was more of a futures dabbler until this show really luring me more to the dark side. But there's a lot going on out there, especially if you're looking for some underlyings with a little bit more spice, a little bit more action, especially in periods when we're hanging out, you know, VIX at a 15, not a lot going on the equity front. You want to look a little bit farther afield, maybe some nat gas, maybe some gold, maybe some fixed income, FX, whatever floats your boat. There's no shortage of action in the futures world. So, and a great companion program as well to our This Week in Futures Options show every Thursday. So a lot going on there. But Mr. Dan, if folks want to check out that podcast you were talking about or your Substack, where should they go? What should they do?
Yeah, just go to your favorite pod catcher and just look up Wealth Building with Options, or go to wealthbuildingwithoptions.com, or go to my Substack, which is wealthbuildingwithoptions.substack.com, and you'll find it. And please give it a listen and let me know what you think. I'd love it if you left a review and gave me some feedback, or just email in or something. I'd love to hear your thoughts.
Oh, cool. So they can get it even if they're not part of the Substack. They can just go get it. Oh, cool. Yep, interesting stuff. So it is a podcast in the normal sense of the word. So there you go, listeners. Now you have no excuse. Go check it out and then leave Dan a review about his day drinking. He always appreciates that. Then we'll know you're coming from the OBC. Check it out, listeners, if you want to build some income using options for yourself. You know a lot of you do. Again, that is going to do it for OBC. Back again in a little bit for the Futures Rundown. Then back again tomorrow with our usual doubleheader. The Flowmaster joining us for the option block like he does every Thursday, talking some unusual activity and wild prints there. Followed by, of course, This Week in Futures Options. And then Friday we come back for the big dog for the week, a.k.a. Volatility Views. And then one final time, exclusively for our pro folks who come back again. This Friday's Oddity is going to be a fun one. You want to join us for that. Of course, talk about unusual activity there. Only place to get that, theoptionsinsider.com/pro. Then we're back again next Monday with the option block all the way through to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.